The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
And the beginning of the week, and we've already had 3 great hours with our technicians here. Thank you to John, Tom, and to Steve. And I'm going to do my best here. Then we go to Larry, we go to Darryl, we go to Dave, we go back to Tom. Full day here. Let's just look at this market. What happened Friday? Well, as I look at the charts, it's very interesting. In the main, not much happened because we are still in the trading range. Now, it's not just that we're in the trading range. It is that we've taken 2, 3, can even say it's 4 or 5 months to be in this rectangle trading range. Look, here. This is what I show my subscribers to my opening call every day. Here's the action, and you can see the reaction to the Fed. Well, it just puts us right back into this trading band. But remember, I've always looked at this and said, until the volatility index starts to make higher highs and higher lows, that's the VIX index, and until there is bad news to accompany the higher VIX as the market pulls back, you probably won't get a sustained decline, which means that we cannot rule out that what we've seen for the past number of months is a huge consolidation, which implies, at least to me, and this is what I was discussing over the weekend when I sent charts out to my subscribers, that if there was a substantial break and a close in the 18,300s in the Dow, with the equivalent breakout in the S&P, at that point, you can say, okay, consolidation done. Let's see if the digesting leading sectors and stocks that have been getting hit fairly badly over the last couple of weeks, let's see if they have a chance to break out and lead, or whether there's a whole slew of new participants. And who would those participants be? Well, a lot depends on the circumstances as it relates to slightly, at least at this point, it's slightly higher yields. And at the same time, what happens in the rotation to the sectors that have held well but haven't led, let's say like the XLF, the financials. Very important. In preparation for a rectangle move that says, that's okay, you don't have to break down anything. You could go from the 18,190s that we were at on Friday and just cruise back down to the 9-period moving average. If we break that, you can go down to the lower trend line somewhere around 17,800. Stay in this rectangle pattern for a little longer as maybe not the worst case scenario, but as a best case consolidation scenario. The worst case, of course, would be if you get sell signals, and what's happened with the Dow, the moment it actually activates a confirmation of a sell mode, just that, all that is, doesn't say sell mode means you have to go down. It means you've reached a certain level in the technicals with the stochastic and the MACD, with the price under the 9-period moving average after making at least a peak D in the Chapman wave, the 4th highest wave, that you can go down further. It doesn't say you have to, it just says you can. But when you're in a trading range with clear support levels and clear resistance levels, this one is now dead. Don't need that anymore. We can actually raise it up here and put it there. So the 18,288 level on the Dow absolutely is a very important level for 2 reasons. One is if you break it and then come right back in, well, you're just back in that trading range. Yes, you're broken out, but it doesn't mean a substantial move. If you break and you close decisively above it, and over the next 3 to 5 sessions, you don't break down below, say, 18,100, as support, or even 18,170, 150 as support, start to make higher highs and higher lows, all of a sudden you've activated something that says, hey, wait a minute, this is not leg E. This, in fact, could be a brand new leg A, but you won't know that until you close, well, actually, until you spike, really, I would say close decisively above the all-time high in the Dow of 18,288. Why am I making it a big deal in the Dow? Because they tend, the indices tend to go aligned. And look, here's the E-mini. E-mini needs to break 2119.75, made a little double top. I was expecting a leg D today. We've got an exact high of 2113.50, the same as on Friday. So you've used up time. It's a pattern that I love to show subscribers that when you go in a narrow channel to the downside, you can break out sharply to the upside. We've just done that. Now it's what happens for the rest of the day. There's new buying coming in. What's the story? So we'll see, and we'll go through it. Let me just run through all the numbers as we this is the beginning of the week. It'll be nice just to cover a couple of these. Here we go. So we've got $INDU. That's how I get the Dow. The Dow has clear. Very strong leg on Friday. Yep, it was Fed related, but it didn't pull back sharply intraday to say it was just a fake out. There was, in fact, buying. My suspicion is that there was new buying. There was a lot of short covering, and a lot of people just saying, huh? I don't know what the heck's going on. We're up, we're down, we're up, we're down, we're up, we're down, we're up, we're down. And all we're doing is standing. It's like, I love this. It looks like one of those, it looks like a dog coming out of the water, and it shakes itself side, you go, boom, they shake themselves, and everybody gets soaked, and the dog's still just standing right on the same spot. And that's exactly what's happening here. However, a breakout into today, just today alone, on the 120-minute chart, we've got A, B. We haven't made a C yet in the 120. So 18,205.24 starts leg C, and then we could even get a D. So to put it, to essentially put it into the context that I'd like it, is to say, at this particular point, there are parameters that I've been looking for that we would like to reshort. Some have been met, some have not been met, different things. And at the same time, I have to be aware that there is a chance that there could be an upside spike. This is the way we have to deal with it. If there's a breakout here, you can see by the Dow's the weekly chart that clearly there's a cup formation, yet another kind of cup formation forming. And that suggests it's kind of a double top action here, going to the 18,280s, maybe just a little bit above 18,290, 18,320 kind of area. And then there's strong resistance. But the actual trend line, if it's this week, goes all the way to 18,344. That's that dashed line right there. Okay, that starts the inside track, repellent zone. Okay, so let's get, and let me just say that that's the weekly chart. The technicals are really not that great, but the price is leading, and price is the arbiter of trends. That's what I always say. And so far, the price is acting quite well. Now, let me just move that away so you can see the candle. This is a little candle right now. Brand new week, brand new candle. The weekly chart, and I spent a little time on this over the weekend, and I also showed subscribers. You see that candle is still looking very good in the monthly chart. If you look at the S&P, you'll see that the S&P every other month, well, the Dow's also doing it, has been kind of making higher highs and higher lows and having peaks. Let me go to the S&P right now. Look at this, SPX.X. Look, D is right there. D's in September. And you go to 2019.26. You have that amazing October where it goes down to 1820 and then rallies up to 2018, closes at 2018.05. And that is just a tad under, but it made a peak. Then you have another month up, 2 months up, and you make E. You pull back. You have another month up. That's F/B. You have another month down, another month up, and that's G/C. So this is really intense because now you're starting to get the declining stochastic, declining MACD. Stochastic's good at 88, but it is lower than it was before. So is the on-balance volume. And then all of a sudden, you've got a candle middle of the month, 11th. We're not even in the middle of the month yet, which is actually looking still very good because the 9-period exponential moving average is at 2,048. We're at 2,114 right now. That is nice action, but we haven't yet. Here's another pattern that we always look at, Chapman wave falling axe formation. And in fact, right there, we're cusping. You can cusp, like on Friday, we were cusping. We could have pulled back. That would have been important, and you could break out to the upside, and that was important. Here we've got the Chapman wave falling axe formation, lower highs and much lower lows, turns around, makes a kind of a U-shape or a V-shaped turn. This is a really important week. Why? All the S&P needs to do is break above 2120.95, the high of the week of the 4th of May. That's last week. Oops, no, I'm sorry, that wasn't the 4th. Yeah, that was the 4th of May. And then, this is a daily chart, and then 2125.92 becomes an upside target. So the MACD, yeah, it's turned around nicely, but it's only at 47%. That's the stochastic. The MACD hasn't crossed positive yet. And in the weekly, it says, I'm flattening out. And flattening out means very limited upside, but it also says very limited downside in the MACD at this point. Stochastic's at 89%. That's really good, but it's really close to turning down. Very important moment we're at. And it's an important moment because if you look at, now let me continue, the QQQ series, 1, 2, 3, the Qs are not doing all that well. You would think they would be doing well, but they're not. And, maybe Apple's a very heavy component. Maybe that's weighing down, but it really isn't. It hasn't gone to the high that was made back on the 1st of May, in the week of the 1st of May, at 111.16. It's at 108.63, only 3 points, not that big deal. But the big deal is that with Friday's action, it should not be down in this area. It should really be above this candle. That's my impression of what's going on technically. It should be above 109.91 instead of $1.30 lower. So I'm watching that closely. Not only that, in the weekly chart, the technicals are very poor. The stochastic's very poor. It's at 81%, but it's really turning down. Monthly chart is good. Actually, monthly chart is really good with the price, but you're starting to see some technical weakness. So this sets up a whole bunch of things right now. And for me, it works out really well that if we continue to have this consolidation and we build up energy, at some point when we do break out, it'll be later. I don't want to see us break out now, coinciding with Giacometti, one of my favorite sculptors of all time. At MoMA in Manhattan, Museum of Modern Art, they've got that fabulous, I think it's the second floor or something. Whenever I have gone to Manhattan on business or anything like that, I just try to spend 15 to 20 minutes just to go in and have a look at that, and I'm happy as a lark. And the Picasso, so Giacometti could, a 1947 work, I think 1946, could get over $100 million. We're talking about $100 million. And a Picasso up there, I'll be back. We'll talk.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So the Dow's down 23, S&P's down 2.39, and a couple of things going on here. If you look at the IWM, it's up 74. It's actually one of the stronger indices today, and it had been one of the weaker ones. So this alternation, the rule of alternation, is going on in the market as we consolidate in a rotational correction or rolling correction. And now it's the IWM Russell 2000's turn to have a little bit of a rally, a little bit higher rally, and it's still way under the 127.13 level at 123.40, up 76. Hey, look at this. The NYA.X, the New York Stock Exchange, has had a very nice bounce. It's closer to its all-time highs than, say, the IWM, but is struggling here because the technicals are really very poor, and the weekly chart technicals are very good. This is something that I've always been fascinated with. Let me just move this away, the 120-minute chart. Look, the daily, the price is moving well, has moved well. But the technicals, let me just have a look at this. The technicals are weak, very, very weak. Histogram's still under 0%, and there's a gap. And gaps at going to close to all-time highs, those tend to get filled. Gaps lower down, it's just like a doji or a 200-period moving average, whatever it is. It's just another little icon that you can look at when you start to head back down. But at this point, it's the closest ones that you look at. And to me, this gap will be filled in And now it's just a matter of when. Is it now? Is it after another rally to new all-time highs? We'll see. But at this point, it's going to have to have a really strong close today and a good move. I said to subscribers that I'm anticipating some kind of a doji type candle today and a down move tomorrow. If the down move takes out the low of today, that'll set in place just this yo-yo pattern between the trading bands, going up to the top and then coming down towards the middle of the bottom, and then going back. It just continues this whole process a little longer. But if there's a strong close today and a big move up tomorrow, that essentially is just going to squeeze the upside. And we could, in fact, see a really sudden move that breaks out to the upside. In that case, it would be above 11,000. Let's just say if the New York Stock Exchange trading in 11,181, down 14, breaks out above 11,250. Let me just double check if that's the number that I'm... 11,000. Yeah, 11,248.99 was the high. I'm going to make it higher. If it goes above 11,290s by midweek, we're going higher. It's just going to be a squeeze. It's just going to be a breakout. I don't think so. I think that this is just kind of stuck for now. We'll see. So thinking and trading, thinking and doing, thinking and being practical sometimes are two different things. I'm thinking one thing. For my subscribers, we've planned some actions that correlate to my thinking, but we've got really tight stops, because if we're wrong, I want to be able to switch to the other side. I'm having difficulty right now finding finding stocks that I feel are appropriate at this level and comfortable with to go long. I am finding some good stocks, but they've either moved too much and I don't really want to jump on right here. I'd wait for them to pull back. So a bunch of things are going on. Meantime, back at the ranch, let's do this. Let's go to gold. GC, this is gold right now, is down $680. Am I correct? It's, about $687 at 11,182. Sorry, 11,000. I'm sure somebody just jumped right out of their chair and said, sell. No, 1,182. And it's under the 9-period moving average. It cannot get out of its own way. The MACD, see, this is what I'm worried about in the monthly charts of the MACD. You see this little tiny, the distance between the fast-moving average green and the slow-moving average, and that the 0% line is under zero right now. And this is the daily chart. The stochastic's way down 39%. That's just saying there is no upside energy at this particular point for gold. And look at the arch formation that's forming in gold yet again. I'm concerned about if gold, which has been in a trading band, starts to take out the 1179, 1178 level support, it can go all the way down to 1168 very quickly. If it takes that out, those weekly charts are going to become very powerful to the downside, because they're going to suggest that the candle of the 20th of March will be filled. That's why gold needs to bounce real quickly, especially if the dollar, which was rallying earlier this morning, now it's stopped right at the 9-period exponential moving average, especially if the dollar's kind of weak here. So this is telling me that we've got a change of scenario here with bonds moving higher, gold unable to rally, but the dollar also not rallying. And that's the reason why I'm leaning a little bit, I'm leaning towards the short side, because that's the way things are looking. I'll be right back. Basil Chapman, we'll look at some other things when we get.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So I was asked about biotech stock Repligen RGEN trading at 38.66, up $1.27. Leg E up in the monthly. Leg G/C in the weekly. I have to call this as I recall. Yep. You know, I was really wanting to call that a Chapman wave phantom peak 16.22 to 16.23 right there. That would have given a perfect D, and that would have, with the MACD and stochastic turning down, then I would have gone A. But then what's the point? Because this is an A. So it didn't work out. The reason being that I wanted to see if it was possible at this point that I might be missing something, that in fact we could be a D in the weekly chart. But you know, it's looking fabulous. It's looking terrific. It's one of the very few biotech stocks that has essentially just gone sideways for its consolidation and then broken out. And in the weekly chart, in the daily chart, this is either brand new leg B or it's leg E. But the technicals are going to be the decisive. No, the price will be the deciding factor based on the doji that was made Friday. My rule of thumb with a doji candle has explains two possibilities very clearly. But all I can say is that it would take a close for 2 out of 3 sessions below the low of Friday of 36.64 and it needs to be done within a few days. You have to start that process for this to start giving a pattern that says it's really the rogue wave, sudden spiral to the upside when the technicals were poor. So I would, if you're long, I wouldn't do a thing about it right now, other than a potential small position. I would take off either right here at 38.62, planning to put it back if the 33 to 32 area, 33.5 to 32 area holds over the next 2 to 3 weeks, if it comes back down there. But the most important thing is, I would probably say to you, because of the action right now, that one of two things can happen. Based on the A, B, I must double check. Yep, that's what I thought. A, B, C, D, peak D that's being formed in the 120-minute chart, that you either put a stop. I would put a stop 40 cents below where it is right now, just for a small position. It's acting fantastically in almost all the time frames, except the daily is suggesting that it was a news-related spike to the upside, and that it will probably have to test the 34.70s. If it does that, it's liable to go to the mid-33 to the 32 level, and that'll then make another pattern that says, whoops, be a little careful, timeout is unfolding. That's the whole part of this, the two-part thing. The second part of it is, you could just say, you know what, I'm going to make, it's still a fantastic stock. Fund managers are going to look at this and say, hey, why own the IBB when I can actually get this stock, which is looking very good, as part of it? I'd rather add to this than add to the IBB. It's acting very well. And that could give it support to say it wants to test the round number 40. And if it breaks over 40, it could, just from a trend line basis, it go a little higher to 40.50 this week. But I think that area will probably be real. 40.50 will be very 39.80 to 40.50 will be really strong resistance. That's the way I'm looking at it. So my suggestion is, what about it? I would take some profits off, and I would say, if I got a core position, that is. Would I short it? There are others that I would short, and we're doing so via different methodologies. But I would say you don't want to short the very strongest stock in what was the very strongest sector, not until you have all your little ducks lined up. In this particular instance, a couple of rogue stocks here to the upside can really change the outlook of the IBB positive, or in fact, it could be a drag on it if they suddenly start to decline. So I hope that helps you. But I know it's an amazing company. What do you say? 20 times sales, 80 times forward EPS. Over the weekend, I did a little bit more researching in the whole biotech area. My thinking is that there is such a glut of biotech exuberance, and the prices that are being paid by companies that are wanting to come from all around the world, I think most of them have already made their bids, and they've overpaid tremendously for the property. And they're taking over one another's buildings as one moves out to the harbor area in Boston. Others are moving into the Kendall Square or Waltham. I'm kind of concerned. I see the same thing in the art markets and all. I think we're in a topping phase here that needs some kind of cooling off period. I don't think this is the big topping off area, but it is a potential topping off area just for. So yeah, that's all I'm saying. So if you've got a call, heaven forbid, I would get you out of your core position when in fact I don't have any technical suggesting right now core position should be liquidated. But I do say take something off, because RGN, Repligen core, has been fabulous. It's still, in a sense, a leader of the sector, one of the smaller leaders in some ways. But yeah, that's my thinking. So I am putting together some fundamentals with the technicals. Now, a question about the volatility index, VIX.X. Let's see. So the volatility index is is up 24 cents at 13.10 after not getting back to the 12.10 level that it made last week or the week before. It went from the 12.10 to 16.36. That's 4 points. That's 33% gain. That is amazing. So now it's come back, but it hasn't come back yet all the way back down. I'm watching the volatility, and you know, I'm watching it real close. We actually, for now, don't have any position at all. We're lucky Friday to be able to get out at the price that we paid because we bought it mostly at the lows. But that's not the issue. The issue right now is that trend line. It didn't hold it. It was very close. And what we were looking at is how will it hold or how will it break? And in fact, it broke. It didn't hold, it broke. And now it has to start a whole new effort to try to get back towards the 14s. And if it can do that this week, that's going to be important. But as I say, unless you get really bad news accompanied by a higher VIX and a lower stock market all round, not just one sector, but all sectors, I think the trading range is it. The rotation of the trading range is really, really important right now. So the VIX right now at 13.06. Yeah, it's low. It's under the 9-period moving average of 13.63. But it is starting to show that it is a little bit of, it showed it last week and it's showing it again now, that it has just a little bit of energy here that could be overlooked if you didn't know the numbers. And the numbers are 12.50 to 12.12 to 12.10. As it went lower and lower last week, 12.10 is the level. A close under 12.10 would suggest that the VIX index is going to be for a while non-compos mentis. It's just out the picture. And we have to look at many other things. That's the way I'm looking at it right now. Let's see, over 120 biotech IPOs with 0 sales in the last year. Yeah, Taponto, that's, you know, there are a lot of things that are going on under the radar because the market itself, I know that over the weekend I played quite a bit of tennis with a bunch of people that some I hadn't seen for since the last season, the outdoor tennis. And all I can say is that there was one person who always talks stocks just for the 8 years or so that I've known him. So that doesn't really count. But normally I would have people across the way with a thumb up or thumb down. And, there were 2 people, both of whom I always talk stocks with. One is out the stock market, sold his house, did very well. Is he renting now? Yeah, he's renting now. Very nice place. Happy as a clam. And that's one way to deal with things. And so he's not in the stock market. He watches it. He used to be in it forever. He was in it until a few years back, and he's just been getting out. So this is a very interesting thing for me because I'm playing tennis with people that had always been in the stock market one way or the other. And it's not like they're getting out because they're near retirement age or something. Many of them are not near retirement age. So it's fascinating to me that the buzz, there's no buzz whatsoever about the stock market. A little bit of buzz about real estate, but the real estate is actually more depressing because people just shake their heads and say, what do? We could sell, get a great price. Where do we go? That's really where do we go? Where do we go? Where do we go? Where do we go? Okay, so you sell. Where do you go? What do you do? So I don't know. It's just an interesting phenomenon because we're very close to all-time highs in the stock market, having tripled. And I still don't hear people. It's not the conversation du jour. It is maybe amongst aficionados, but not amongst the lay people. And that says to me, we've got room to go on the upside, regardless of the fact that I am expecting one sudden swoon to the downside, which is going to be a kind of a scary swoon. But it might be a swoon in your particular sector or a sector that you're in. That makes it scary. Because if you've had 2 months or 3 months of consolidating, it means that it's been, and because it's rotational, as long as the Dow sort of stays in this area, if everything went down together, that's one thing. But when you rotate through, it can bypass, just this market's choppy. Yeah, choppy. So this is a fascinating period. But as I say, it's looking at the individual stocks. For instance, I see that U.S. Steel is up. Stock I've loved for ages. Hard to trade. I mean, it went to a peak deep perfectly in the Chapman wave, hit the 200-period moving average. And now all of a sudden today, out of the blue, it's up 4% at up 0.98 at 25.30. Stochastics turned around. MACD still doesn't look great. And the weekly chart looks terrible. It's just making a series of arch formations. But that rotation suddenly into steels, give me a break. What is aluminum doing? Alcoa made a peak E and it's just dormant here. It's not doing much at all. Even that rally was not very big. Well, it was on percentage terms, but it went from the 1260, what was it? 1265 level to the high very quickly to the high of 1429. Nice percentage, but wow, the monthly chart does not look good. So this is a real rotational aspect. Now, let's do a couple of things. I want to look at, just quickly, I want to look at oil, USO. The USO is pulling back, made a peak E. Yep, it's pulling back. The TBT didn't pull back very far. The TBT is, oh, look at that. TBT comes down from peak D. And what I'd say is if it gets into the 48, anywhere in the 48s, it should try at some point to hit the 200-period moving average of 49. We got a caller. We got Brent in Martinez, California. Let's go to Brent. Brent, how are you?
I'm doing just great, Basil. How are you today?
I'm good, thank you.
I'm happy to hear that. I'm calling about Yelp. I'm not doing a lot of shorting right now, but I did buy some puts on this on Friday. It had two kind of big days up after bad earnings, and it was all based on just somebody talking about they could be bought out, and to me it didn't seem like anything that was really fundamentally, justified the move up, and so I did buy some puts. I just want your opinion, please.
I looked at this as well. I saw it go by, and I thought, Yelp, I hardly ever use Yelp. I wonder how many people do use Yelp, and I'm absolutely no example whatsoever of whether things are used or not. But I just thought it was very interesting because my question to myself was exactly how does Yelp help? And I suppose it does, but you can really just go to Siri or anything like that and just ask a question. It will do almost the same thing. Now, what I have found with Yelp, which is it's an online help. You can go to find out the nearest service station, restaurant, coffee, whatever it is. So in that regard, it's a very clever concept. And they did it very well. Whether it's well enough, I don't know. But I'm going to do this A, B, C, D. So it's leg D down in the daily. It had made a high. What it came out was back under 20 when it came out, and then it went all the way from that to 101.75 in February of last year, March of last year, and now it's trading at 48. It had hit 38, just under the round number. It went to 37.91. And that was on the 6th of May. And it had gapped down after peak F top in the Chapman wave back in 27th of April. So when I saw the gap down, I thought, obviously they're not doing very well. So I don't know if this is takeover rumors or anything, but I had a good look at it over the weekend. Didn't put any notation in because, to tell you the truth, I don't really have any interest in going long. And I never really thought about it as going short because I didn't know what the spike. You see, if there was a one-day spike to the upside and then a pullback, I'd say, just news-related. A two-day spike must have been carried because Thursday was very good, and then Friday it had the momentum from the big move in the general stock market. That must be the thing. So now let's go to what I would expect. The 47.40 to 46.81 area are two moving average support levels. My thinking here is that if it even gets down to the 47.20 to the 46.80 area, it's probably going to go a little deeper than that. 45. Well, let's talk about it when we get back. Folks, we got Brent in Martinez, California, online looking at Yelp. Dow's down 27. Basil Chapman. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, we're back, and the Dow is just kind of stuck here. Actually, after Friday's huge update, this is quite good action, considering that you would expect to give back about 55, maybe 65 points in the Dow, S&P about 7 or 8, and then maybe trying to find a base. But my impression here is that this market is just stuck in the range, and how it gets out of the range, up or down, is going to be very important. So what I'd like to say is that when we're looking at this Brent, so what I'm going to do two things here. I'm going to suggest that because I don't know, I meant to do it during the break, but I was asked other questions, so I didn't get there. Do you know what it was that spiked Yelp to the upside on Thursday?
Yeah, there was some talk about they could be bought out, or they might put themselves up for sale, or.
Okay, that's all I want you to know. Good.
Yeah.
That's all. As long as it wasn't. See, the earnings report must have been on the afternoon of the 29th, when it closed at 51.28. Next day, it's down at the 38 level. So this spike should give back at least a half of what you've got. I like your position. I think a lot depends on the market itself. My suspicion is that before it gets to 52, it's at 48.47, and the high on Friday was 50.99. So until it gets close to retesting the high that was made just recently of about 52.51, I think it's going to break the 3 points down rather than 3 points up. So I'd be looking at that 46.20 to maybe the 45.50s. That's the 9-period moving average. I would only suggest to you, if later in the day there's a market rally, see if Yelp rallies or not. If it fails to get from 48.43 to 48, even 48.65, it just gets stuck here, that's a good sign for you. If it moves with the market, got to be a little bit careful. The way it's looking from the 120-minute chart, that was just a sporadic pop to the upside. And there should be at least a test of, what is that right there, 47.10 to 46.90. Looks to me like that's going to happen. Hope that helps you.
It does, Basil. I just was going to say really quickly, I know you like the round numbers, and I do too. Look at Alibaba sometime. The low it put in was 77.77. So just have a good day, Basil.
Yeah, thank you. 77.77. There have been a lot of really interesting numbers lately. Thank you, Brent. So let me just do this. Thank you. Thank you for calling. Good luck with your trade. So what I wanted to do just before we wrap up, because you're about to go to Larry Pesavento, should continue the best we can do here at TFNN attitude. We like to give you all our information. I wanted to look at, so it's Alibaba. I wanted to get out of it. I wanted to say, look, when I look at GE, which is just stuck, it's down 27. I look at IBM, which had a fabulous move, but now it's just kind of stuck. It's at 171.88. If I look at Triple M, this is my Dow Quartet. Nice move up, but what? Nice move from the 200-period moving average down at 156, where it was up at highs in the 170s. This is not very good action. And UTX, which is the other fourth of my Dow Quartet, nice day today, but boy, it got slammed from 124 down to the 113 area. I think this move is suspect. The move on Friday is absolutely suspect. I think it is very much like the Yelp. It's kind of a news-related emotional event. So we'll see. Am I correct in thinking that we're still stuck in the trading range? You'll know. A close into the 18,300s, and we've broken out. Make it as simple as that. VIX will go down to the 11s, and you'll have your big move to the upside from there. But at this point, I think we're still consolidating. We're still in this trading band, and if it's what you want to trade, I would say as you come into the rest of this week, as the days unfold, you will find which stocks are holding best, which are the ones that are showing they've got resiliency. Those are the ones that will do best when we finally break out. Thanks for being here, folks. Check out my opening call, very comprehensive newsletter, and stay tuned for Larry.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.